Hey guys, Stock Saturday, and it's a slightly red week, about 7,000 down, sort of 3-4%, and this seems to have largely come in the last day. So I think this may have been sort of options activity and sort of rebalancing and things for the last day of the year. But yeah, there was sort of quite a whack on, well, even the indexes and a number of stocks, but particularly the crypto miners. So CleanSpark was down 15.8% yesterday, and sort of most of the other miners were following suit. Bitcoin isn't particularly down; it was down slightly yesterday. So yeah, I'm just thinking that's, I don't know, maybe options or people sort of taking profit from the year's action. I presume pretty much everyone is green, so yeah, taking a load off, and I'd be expecting sort of a reasonable green move going into the new year, potentially sort of with those ETF announcements if they are good. So yeah, that's not a bad sort of end to the year really, considering the last sort of few months. And I thought, yeah, time for a review of the year really. So I'm at 216,000 at the moment. Just looking at last year's end of year review, was at 161, so that's about 34% green for the year. I've obviously deposited a little to sort of get some of that, so it's maybe sort of high 20s, maybe 30% green if you sort of exclude the deposits. And yeah, just sort of comparing that to the market. S&P's up 24%, 24.7, and the Nasdaq is up 55. So I'm sort of sandwiched in between those two, sort of much more towards the S&P. But yeah, I didn't think that was too bad really. I know why I'm obviously underperforming the Nasdaq because I don't really have much of any big tech. And well, to be fair, a large part of my gain for the year has just come from CleanSpark. So have to be aware that I'm sort of in somewhat lower beta, sort of lower risk stocks, and especially the large portion on gold and silver. But I do sort of expect that to do well over the next couple of years. And sort of I've explained a few times the reason for this sort of portfolio composition, not really wanting to sort of have the big tech and that sort of thing, is that I see my crypto side as the sort of high risk. So I didn't want high risk there and high risk in here. Happy to sort of keep this as more of a somewhat value portfolio. I mean, there's some in here that are sort of fairly high. Broadcom sort of running fairly high at the moment, and then obviously CleanSpark as a sort of net profit, unprofitable miner, and even some of the gold and silver ones, if you take into account their expansions and things, are sort of at a net loss. So yeah, it's a little bit of a sort of strange portfolio, but that is partly because of the crypto side. If I sort of get rid of the crypto completely, I'll probably have a little bit more growth stocks in here. So yeah, I'm pretty happy sort of in between those two, closer to the S&P 500. As I say, largely because of CleanSpark. Compared to the UK, of course, it's monstering ahead. 2.37% for the FTSE 100. You get a little bit of dividend on top of that, but it's not really going to do the business. And FTSE 250, 2.9%, so barely better than the 100. Smaller dividend from the 250, so it's just not really a place to be, is it? I mean, that's the last 5 years, and you're up 10% plus the dividends. So yeah, it's just not great. FTSE 100, 13% plus a slightly bigger dividend. It's just, yeah, it's not great. So looking at some of the larger holdings, I've got Stellantis right at the top of my invest account, which has done pretty well for the year. 60, just touching 60% capital gain, plus a fairly large dividend once per year. They don't go in for the quarterly just at the moment, but yeah, it's done very well. Waiting on February for full year results, and we already know the July to September quarter's revenue and units, so that's pretty good. Not expecting a sort of a particularly big drop off in sales towards the end of the year. So yeah, should hopefully be record revenue and record profits ideally. But yeah, that's done sort of really well, and I'm sort of fairly happy to carry on holding depending on those results. I'm not really wanting to sort of take profits or anything just yet. The emerging markets ETF is a bit of a strange one at the moment. This sort of been dogged by China issues mainly. This sort of China side is, I think, about 30% still of the ETF, and yeah, that's been sort of taking it down a little. The India side does help rather. I think the sort of South America and places like that sort of been dragged down on currency issues and commodities coming down, but yeah, so just overall, it's not done particularly well. 2.74% down for the year, although I haven't held that all year. And then you get a small dividend to sort of probably push that break even for the year. And I am actually sitting at about break even now, so yeah, that's been okay and sort of something that I will look to top up over time with some of the crypto money, I think. The process, sort of part of that China sort of taking a knock with it being mostly Tencent. That's down 11% for the year. Sort of good portion of that in the last sort of week or so. If you take it to just where are we? Just before that drop, it was 2% down for the year, and they have sort of put out a couple of small dividends. But yeah, it's sort of news about a slight crackdown on microtransaction practices with Tencent's games. So yeah, nothing that I didn't really sort of disagree with. They're sort of saying that you can't give people a bonus for doing multiple microtransactions in a row and that sort of thing. It sort of seem changes that are sort of quite welcome, really. But obviously, it's a hit on profits short term, and yeah, the sort of good news was they were approving more games, so tightening up the rules but allowing more games. I would see that as a positive, but the market didn't take it very well. So yeah, kind of tempted to. I've sort of mentioned a few times switch from Process to Tencent Direct rather than sort of still holding Process, because they are steadily sort of selling their stake in Process and investing in their sort of other bets, which I would rather, I think, just hold the emerging markets ETF. To be honest, Process other stuff is nearly all unprofitable. Food delivery companies and sort of various tech things that haven't really gone all that well. So yeah, still considering that. So my semiconductor side is a bit of a mixed bag, really. Kind of forgot TSMC started out the year sort of in a relative low, and is actually up 40% for the year. So that's pretty good. I still think it's at a reasonable value level, considering sort of the rest of the semiconductor market has risen quite a bit. And a lot of those stocks, or a lot of those companies do use TSMC, sort of Nvidia in particular. So aside from the China Taiwan risk, I don't really see too much wrong with TSMC, other than maybe Intel sort of looming on the horizon next year. Supposedly they're going to have a competitive node, but I think there's room for both of them and sort of other players, Samsung and people like that. I think just the overall semiconductor industry is going to be doing well. So yeah, you've got that, and Intel are also using TSMC, it seems, for part of their offering. So they're actually going to become, sort of, from what I understand, a top 5 customer of TSMC. So yeah, take with one hand, give with the other. I don't see that as bad at all, and one that I'm looking to add to over time. But then you've got On the flip side, Broadcom 101% up for the year. Haven't bought any, haven't sold any. It's just been sat there all year, continuing to sort of go on these step changes up, and yeah, it's just gone on one towards the end of the year. Sort of seeing people saying it's a $1,300 price target for sort of next year, and sort of got to digest this VMware acquisition, but they've done it many times before, sort of Symantec and people like that years ago, and expect they can do it again. It's always looked sort of fairly high value on a trailing PE basis. I tend not to look at that too much. I look at forward PE, and even then it's looking a little bit expensive, sort of high, low to mid 20s now. But yeah, I think the revenue that the acquisition can bring in should hopefully sort of push that earnings estimates up a little and sort of bring that PE down. So yeah, I'm not really looking to trim any just yet. I think if it sort of runs a fair bit further, I might sort of take some off the table and sort of get most of my stake back. But yeah, if it just stays here and sort of keeps trickling up with earnings expectations trickling up, then I think I'll just hold on. It's one of my bigger performers, sort of 175% up in my holding, plus the dividends. So yeah, I'm pretty happy with them at the moment. And then we've also got my other smaller one, Himax, which I've got the options on as well. Year to date, that's not been too good. It sort of did have a run up into the 8s briefly at the beginning of the year, and has sort of trickled down again. But this is they've sort of mentioned inventory issues that are and one-off charges that are sort of largely out of the way, and they're sort of optimistic going forward with the automotive and sort of potentially VR sort of and AR not looking particularly lucrative at the moment. Sort of sales of Facebook's headsets down, so yeah, still up in the air on that. But you've got Apple's one as well. I'm still sort of fairly bullish, and sort of automotive sector should just keep increasing. So yeah, I'm very bullish on Himax, and not selling at all. Holdings do seem to be sort of grouping themselves together quite neatly at the moment. You sort of got the semiconductor side as fairly large holdings now, and then sort of the base metal miners dropping down to the bottom through sort of price appreciation alone, not really through selling. So you've got Rio Tinto for the year, pretty much flat. That's excluding a reasonably large dividend, so it's sort of 5-6% up for the year. Not blowing the doors off, but obviously they've had issues with commodity prices and oil prices and all sorts. So yeah, I'm sort of bullish going forward. Maybe not so much on Rio Tinto, because that is largely the iron ore side. Similar with Vale. Year to date, they're sort of down 3%, but the dividend puts them in the green. So it's sort of holdings like this that are making me underperform the market. But yeah, not too bothered about that at the moment. Still positive going forward. People like Glencore, I think, are some of my more optimistic ones, being sort of more copper focused and sort of various other metals, nickel, depending on what batteries are going to be made out of in the future. So yeah, that is down for the year, even including the dividend, but I'm still pretty happy with where they are. Obviously, you could still get commodities drop even more in a recession. If we do get that, then these miners are going to drop, I would have thought. But yeah, it remains to be seen whether we are going to get that recession next year. Just looking at a few sort of that I did sell as well. So I got rid of Meta Platforms. That's up 183% for the year. I think I sold that sort of in the 290s-ish, sort of earlier in the year, probably about there maybe. So yeah, it's up 25% since I sold it. Didn't really expect it to to run quite this far, but the sort of Magnificent Seven, as they call them, have all been sort of rocketing up. So that was maybe a bad sell. Nintendo I sold and has been sort of continuing to do well. Missed this run up. Not really sure why it's run up quite so much. People sort of maybe anticipating the successor to the Nintendo Switch, but no guarantee that sort of does particularly well. Yeah, it may be sort of something that I buy back into later on, but yeah, it does sort of doesn't look historically cheap. It's just as they are, really. And you've got Volkswagen and Porsche, which I did sell both of in the end, sort of wanting to focus a bit more on Stellantis. I didn't actually put the money in Stellantis, but yeah, just sort of happy with them alone. Volkswagen sort of down 7.2% for the year. I think even the dividend doesn't put that green, so yeah, I did sort of sell it part the way down this drop, and yeah, they're sort of doing okay, still very high on the EV numbers, but I just yeah, started to get a bit annoyed with the high debt. They don't seem to be getting rid of it. Whether they'll eventually start having higher interest rates creep into that, I think they will, even though a lot of it is sort of fixed at low rates. It's such a big amount of debt, and I felt sort of Stellantis were in a better position overall. So yeah, not really sort of too sad to get rid of Volkswagen, but I do keep an eye on them. So then CleanSpark, I suppose that doesn't really need much of a review. That's obviously done really well. I was sort of buying it not quite at the lows. Could have been buying lower. I did sell Argo Blockchain earlier in the year for a very large loss, and have since made up all of that loss and a little more on CleanSpark. But I think I actually would have been better off just holding Argo Blockchain, but then I thought they were going to be going bust, so yeah, no worries there. It's sort of done well since, and yeah, happy to carry on holding sort of past the ETF news at least. See if we get a reasonable bump after that. So I think the gold and silver miners are sort of all largely similar in price, so I'll use Cure Mining as sort of a bellwether for all of them. They're sort of not all quite the same as this. Equinox has been doing a little differently, but yeah, I'm in the green on these after sort of heavily averaging down at the lows. It's down. Cure Mining's down 4% for the year, but I'm actually sort of, what are we, 26% in the green. So I was sort of buying a huge amounts at the lows here, and sort of I was buying some in the sort of mid $3, so that's where it has been recently. And yeah, I'm now green, but very, very positive on these sort of for the next couple of years. I think if we get sort of money printing and maybe a small recession and reduction in interest rates. Just looking at one of my sells as well, obviously the big holding for the last couple of years, Sylvania Platinum, that's down 27% for the year, and I did see most of that loss, I think. Sort of sold this on the run up back towards 80 pence, and thought that was enough for me. Didn't really see too much bullishness going forward, with it being tied to petrol and diesel cars. And yeah, it sort of dropped on the ex-dividend date since, and I think yeah, if I'd held it, I would have been about break even now with the dividend, sort of since from holding it break even, sort of down 6% with a 7% dividend, I think it was. So yeah, it's not all that bothered about getting rid of that now, and don't think I'll be buying back in. It was always a sort of short to medium term hold, thinking the platinum group metals would see a spike upwards, but with more sort of electric vehicle demand globally, I just can't really see this coming back. Could do really well. You could easily get a squeeze in platinum group metals, and this sort of rockets up, but I think that would be sort of short term supply issues and sort of not really something fundamentally that I can put my chips in. So with that and the options sort of largely being in the same stocks, that is sort of how I've done for the year. Sort of waiting on commodities doing reasonably well, hoping next couple of years, and crypto, gold and silver sort of hopefully breaking through this sort of $2,100 barrier that it's been having a couple of goes at, and yeah, hopefully sort of have quite a large change in the portfolio over the next couple of years. But we'll have to see where we go. Certainly hoping for big things from the option side if the gold and silver does do well, because I still think they're fairly low valued, and certainly high max. But I did buy some on this drop yesterday. I bought some more Equinox contracts, about 10 contracts, so that's sort of pretty much all of the Coeur mining position swapped over. Sort of selling end of next year Coeur mining positions for end of 2025 Equinox positions for the same price. So that's fairly happy with that now. I don't have all that much for end of next year now. It's largely end of 2025. So pretty happy with those. And Himax as well is pretty much all end of 2025 now. So yeah, very happy with those. Not sure I'll be adding sort of too much more unless we get some drops. But yeah, hoping for a big change in sort of these in the next couple of years and be able to sort of put that money into growth stocks potentially. So yeah, let me know how you guys are doing and how you've done for the year. Are you outperforming the Nasdaq even, or are you outperforming the FTSE 100? Because that isn't exactly a huge bar to set. So yeah, let me know your thoughts in the comments, and like and subscribe. See you soon.